What's going on, traders? Welcome back to my YouTube channel. Hope you're doing well. So today we're going to be discussing high probability trading setups. Now, there's one thing that I've realized as traders, we come to the charts, or let's say this, we spend the whole weekend thinking about our future, our dreams, our desires, the things that we want to achieve and, find success in. And, we might be thinking things like building a small account, using the funds that we've got to replace our monthly income, or we might be thinking about things like passing a challenge. During that weekend, we sit there and we, make a plan, walk through the process in our head. And then the minute we come to the charts on Monday, we're feeling pumped up and ready. And then we get that sense of urgency, need to have to take a trade. And I think that's one of the biggest things that I find with traders is that they're constantly wanting to trade. And this makes it very difficult for us to get consistent results over the long run, because if you're wanting to trade every single day, then there's a very high chance the market's not going to move in your favor for many different reasons. And if I was to label those reasons on this session, we'll be here for a very long period of time. But what I want to do today is just go over the markets and just give you an understanding the sentiment, just to help you to really identify what it means to trade high probability trading setups. I think if we can do this on a daily basis and fight that urge or that need to want to trade, then you definitely find more success with your results, leading to consistency and then ultimately profitability. So without further ado, we're going to do that. And of course, I hope you like the video. If you do, don't forget to hit that like button for me. Subscribe if you're new to the channel, welcome. And of course, turn on notifications for when I next post our videos. Without further ado, let's get on with the show. Okay, so traders, we're going to discuss yen weakness today. And if you've been trading, you probably would have seen it was the most easiest currency to trade against. Now, you can see here with the news, we have euro yen price analysis. The sky is the limit. This is 9 minutes after the move has happened, obviously. But I will show you how we could have identified that previously. Then we move a little bit further down here. And you can see, it says here, USD JPY extends to relentless rally to the 125 mark, highest level since 2015. That was this morning, just after London opened. And then we had another one that I did find, which was, oh, there you go. Pound JPY trims apart of strong intraday gains over multi-year top, holds above 163. So what we're identifying here is this: euro yen price analysis, sky's the limit, meaning that yen is weak. Pound JPY trims part, strong intraday gains, which means yen is weak. And we also have here USD JPY extends to relentless rallies, highs 125 mark, which is yen weak. We also go over to Forex Factory here, and you can see current weak yen, positive for economy, further weakening beyond 130 would cause problems. Whatever the problems may be, it's not our concern. But what we're gathering from the fundamentals here, and I'm not a fundamentalist because I focus more on technical sides, and it's very easy to identify this before even reading the news, but the yen is showing signs of weakness. Once we have that information, what we can do when we start our trading day, let's say you start in pre-New York, pre-London here. Through the Asian session, you can see this 2 o'clock candle here. For the first time in a long time, we broke above this level around 97.74. Now, with this break above this level, you can see that we've sustained this and we've held it for the 6 o'clock close, which is 2 hours before London open. Then what we anticipate here at this stage is, because the currency that is pushing bullish at this stage is the CAD, it is illustrating to us signs of yen weakness. Now, we can't confirm that yet, but what we can start to identify is a consensus across the market that yen is potentially weak. We also have here favorable market structure, which is pushing bullish. And we also have an area here in the market where prices breaking and closing above. Now, we speak about this a lot. If price breaks and closes above structure, there's a very strong chance price will continue pushing in that direction. And if it breaks and closes below structure, there's a very strong chance that it will continue in that direction. But let's add a little bit more confluence to this. If we go over to New Zealand dollar JPY, what can we identify? Well, we can see for quite a long time, the structure of the market has been pushing bullish. Here we have a level in the market around 85.22, where price is just broken above, indicating now New Zealand dollar strength and yen weakness. The confluences we add is now CAD JPY doing the exact same thing. And now we're starting to build a picture that's illustrating to us that during the period that you're about to trade right now, which is pre-London, that yen is showing signs of weakness. We have the news that supports this. And we can even bring in one more confluence here. Look at USD JPY. We can see again, the overall sentiment in the market has been pushing bullish. We also have an area in the market where price is failing to break above around 122.41. And now we have that close above. Again, if we close above structures, we continue bullish. If we close below structures, we continue bearish. So with those three confluences, identifying that yen weakness, added to the confluences that we can see from the sentiment of the market with USD JPY and New Zealand dollar JPY, we can have full assurance that the sentiment of the market today is aligning, creating high probability trading setups. Doesn't matter what time frame you're trading, just high probability trading setups that could possibly, if we take these trades, work out in our favor. So when we have this information, we now understand the full sentiment of this market. It means that we can confidently look for trading opportunities. We haven't scaled down yet to look for patterns or anything like that. We're focusing on the sentiment of the market. Now we have that, what can we start doing? Well, we can mark the area where price is broken. We can identify the area where price needs to break above to continue that intraday bullish trend. So let's say we scale down to our 15-minute time frame. You now have that intraday trend that is illustrating those higher lows, higher highs, higher lows, higher highs, etc., etc. When we remove the candles, which is a noise and distraction, you can now see here the trend is up from an intraday perspective. Again, continuing to add more confluence to that yen weakness because now the structures are in line. And then what do we do with an instance like this? We can start looking for our trading opportunities. Now, it's exactly the same thing when we scale down here. Once we identify an area in the market where price is failing to break above, this is the area in the market where price is just closed on that 4H candle. We're now ready to trade pre-London. What are we looking for? We're looking for that sentiment to illustrate that behavior we've identified, which is yen weakness. Once we break above structure, what can we do? We can enter the trade. Where you place your stop loss, it doesn't matter. And then what do we anticipate? We anticipate a continuation of that bullish behavior in line with the confluence we've identified and the sentiment of the market, which is yen weakness. And this is a 15-minute trade you could have taken today based on the information that we've just seen. If we go to New Zealand dollar JPY now, what do we do here? Well, in an instance like this, we can see that the market has just broken above this key level. We have a 4H candle close above this level, which was a significant level at 85.19, where price was holding. We now use scaling down techniques to, let's say, go to the 5-minute time frame. And what are we looking for here? Well, in this instance, we can see the overall market is making higher lows, higher highs. And here we can use what we call pattern trading. Now we have a significant level in the market where price is holding. We have here in the market where the previous 4H candle just closed above this level. Instead of looking for the breakout, close above on the 5-minute at this level, what can we do? Well, we can identify the deep pullback into a major key level in the market, which is this information here. And now we can look to enter the trade based on simple price action patterns, which we would call this, let's say, a double bottom pattern. And now you have another beautiful trade. What I'm trying to illustrate here, traders, is this, not so much how to trade, but having that full belief system in what you've identified with your pre-analysis, which is yen weakness across the sentiment of the market, which is creating those high probability trading setups. So now we no longer focus on the perfect entry, perfect stop loss placement, perfect pattern, perfect breakout. We're focusing on the sentiment, which is adding that value to the trade idea so that when we enter it, we have a high probability trading setup. If we take a look at our final example here on USD JPY, you can see again, very similar structure, if not identical. And in terms of not even structure, let's just focus on the sentiment. We have price breaking above this very significant level around 122.41, illustrating yen weakness. If we identify where this candle was closed, we can now use scaling down techniques, even just to the 1 minute time frame, to start to identify what is happening over here. You can see that the market conditions have been pushing bullish from this point. We're now making new higher highs and higher lows. Price comes back to an area in the market after that 4H candle has closed. So let's find it, which is right here. So anything to the left. What we're anticipating is the market to create that new higher low as part of this new uptrend, which is this information here. We isolate the level where we anticipate price to create the anatomy of the wick, which is this information here. And now you can look to take trades within this area. How you take them is up to you. You can take the immediate pullback to the level in the market where price is just broken above that 4H candle. So let me just highlight that again. This is the 4H candle. So we're not worried about the 1 minute noise. We're looking at this 4H candle, which is representative of this black line. Past this point, which is a 4H candle close. So you can look to enter your trades here for maximum risk to reward ratio trades. We're not even going to worry about this, but this is ridiculous. You can look for your breakout entries above structures that we use on intraday timeframes, which is this information here. You can place your stop loss above the higher lows of those structures again to look for high risk reward ratio trades, because not all the time on the low time frames you're going to find the best patterns. You can use the level where price creates that level and then look for the market to come back again to look for potentially double bottom patterns and look for breakout entries like this. It really doesn't matter. The point is this, traders, when you can connect your higher time frame sentiment with your intraday time frames, it doesn't matter whether the pattern, the structure, the development of what you're looking for is perfect. If you understand the sentiment, you will always have high probability trading setups, because what we've identified pre-London this morning is that the yen was super weak. Anything against the yen, let's go to pound JPY. Let's go back to pound JPY. In theory, that market should have been pushing bullish also. There you go. Break above the structure, pushing bullish. Go to euro yen. There you go. Breaking above the structure, pushing bullish. Aussie dollar, breaking above the structure, pushing bullish. Once you identify the sentiment of the market based on evidence from a price action perspective, you don't even need fundamentals. You can then use that belief that the market will continue in that direction during a high volume period, which is London. Use scaling down techniques to find key levels, breakouts, or patterns to add confluence to your belief, which is price will continue bullish based on yen strength. And now you have high probability trading setups. If the markets don't make sense to you, there is no point trading. Doesn't matter whether a pattern looks good, structures look good, breakouts look good, it doesn't matter. There is no point trading. Understand the sentiment, identify the strength or the weakness, find the correlations, scale down, enter where you feel is right to enter based on your trading plan. I hope that was useful to you. I know it seems like a mouthful, but it's very important, because trading is not just about let's enter here, let's take a trade here, let's work hard all weekend and back test and get positive results, so then come into the markets on Monday and do the same thing. If you don't understand the story you're building up from the beginning, middle and end, then you're going to find it very hard to trade what the market is telling us. So look for high probability trading setups by identifying the sentiment, finding the correlations, then heading down to your lower time frames to look for those patterns and processes. Hope you found this useful. And if you did, traders, make sure you smash that like button for me, please. Share this with everybody. Subscribe if you're new to the channel. Again, turn on notifications. And until next time, as I always say, continue to trust the process.